The Fed's decision to taper its quantitative easing program by another $10 billion has spooked the investors across EM currencies. Fall across the board has been seen. The rupee also takes a knock on the same way. 62.56 is where we shut shop, nearly 0.25% on the lower side. Let's get in Nizam Idris. He's MD and Head of Strategy, Fixed Income and Currencies at Macquarie, and he joins us from Singapore. Hi, first of all, how do you read the move in the emerging market currencies, the initial sell-off and then the surprise rate hike in India and doubling of repo rates, cutting off doubling repo rates from Turkey as well? How have you reacted to the emerging market sell-off?
Expecting the BOE to begin to talk hawkishly and probably hiking at the end of this year. And we have other central banks as well looking to hike interest rates like RBI and Z in the developed world. Now, in this environment, I think that emerging market would need to build more in risk premium and in real rates to buffer the flows in the capital market.
Nizam, also, what is your reaction on the Fed's move, given the fact that it was the last Fed meeting chaired by Bernanke before Yellen really takes over?
I thought that was expected. 10 billion reduction in purchases to 65 billion. I think they will continue this. Really, there wasn't exceptionally new information there. But I think the Fed would be pleased by the fact that the taper has started with yields not reacting negatively. Domestic yields have actually remained rather suppressed. 10-year yields at around about 2.7%, I think, would actually encourage them to continue to taper. But I think the Fed would also have to be mindful of what's going on in the emerging market world.
Sure point. What, according to you, could be the pace on Fed take on its tapering of the stimulus? The emerging markets, apart from China, slowdown also are watching at Fed moves. What's your sense on quantum and period in sense of Fed tapering?
Well, it looks for now that they will taper 10 billion at every meeting we have 6 more meetings this year, and that would actually bring us to, the end of QE3 by the end of this year. That pace, I think, is the perceived or the expected pace of tapering. However, I think, like I said, I think the Fed would have to be mindful of what's going on elsewhere. The reaction in the domestic rates markets have been decent, but the reaction in the emerging market world has been a bit more volatile than it would have been preferred.
Well, absolutely. While the emerging market currencies have seen a decline, the rupee also had seen quite a bit of a decline in this week itself. How are you looking at the Indian rupee going forward, Nizam? And would the rupee be part of emerging market moves, or do you see more internal factors like election and current account deficit playing a larger part?
If we do see faster taper, for example, or if we do see a more wild reaction in the US market to the Fed taper, higher interest rates in the US, for example, that could actually still contribute to rupee volatility. For now, I'm of the view that the rupee will weaken on both factors, on both domestic and external factors, but only gradually, because the RBI has done a few right moves, and that should actually sort of provide a cushion for the INR. And I look for the INR to stabilize around about 64 for now.
All right, Nizam, we'll let you go at that. Thank you so much for joining us. So 64 is the level coming in from Macquarie as the rupee, a level that it could really stabilize at. Let's also get in then Vijay Bhamwani, who's author and CEO at bsplindia.com, and he joins us in the studios. Vijay, what's your sense on the rupee now? How have you seen it on the charts? Because we have been very choppy, but having said that, 63.5 has held.
Manisha, I would still hold 63.25 as a threshold above which the dollar will start to accelerate on the upside. And on the flip side, if the rupee was to appreciate, the potential for appreciation still remains up to the 61.80 levels, give or take 20 paise here and there. For emotional turbulence, I'm talking of the futures price, not on the spot rate. So once you see the dollar go past 63.25, I think 64 will come, 64.5 also probably will come fairly fast, because the shorts are likely to get squeezed, and a short squeeze will actually accelerate on the upside. I think the theory that I have been floating around since the last 3 or 4 trading sessions, that we are likely to see a pro-cyclicality in the beta in the markets, with a bias towards unwinding across the board, across asset classes, is now unraveling. Although I would still hold it's still premature, early days yet. to actually confirm that. But if the rupee was to depreciate for another couple of trading sessions, I think procyclicality would actually accelerate across the board.
But you also a word on the dollar index, because that has turned around 0.5% up on your screens right now. We seem to be inching towards that 81 mark yet again.
Yes, Manisha, I think what you are seeing is that the US economy is showing signs of more and more confidence, and therefore the Fed no more requires the crutch of the quantitative easing. So there is likely to be a flight to safety, there is likely to be an inflow towards the US markets, and where the dollar index is concerned, I think 80.40 is a support for now. Upside potential could actually come up to 81.20 levels. So I would still think that the US dollar index still has some headroom for up move here.
Vijay, we saw an emerging markets currencies decline yet again today. I mean, much on the expected lines after the Fed tapering yesterday. In all of this emerging world, where do you see some support coming in? Because the lira has gone down, the Thai baht is yet down again. Ditto is the case with perhaps won and ringgit also.
Manisha, if you're looking for a place to hide, I think you might find some pockets where the declines could be relatively lesser or higher than the INR, but when the tide goes out, I think it takes all the boats with it. There will be variations to the extent and the impulse of decline, but I think emerging market currencies are likely to weaken almost across the board in almost a uniform fashion. I don't think there's any place to hide, so I would not bet on the emerging market currencies now.
Let's also get on board Pramit Brahmbhatt. He's CEO of Althari Financial Services, and he joins us in the studio as well. Pramit, hi, welcome. What's your sense on what the Fed has done, and do you think the immediate knee-jerk reaction that the EMs had to give is now out?
I think what Fed has done was more than expected, that a $10 billion cut will come during the January meeting, after the December meeting when the Ben Bernanke announced that they are going to have a similar kind of a tapering in coming months. So it was more or less expected. But there was some sort of apprehensions for the market to accept that whether it's going to happen now or maybe in the next Fed, and it has happened now. So I think the markets are, emerging markets are going to see even further decline in coming days, and the funds will be getting out of the emerging market, and the reactions will be coming at the later stage.
Pramit, I was talking to some bankers in India and abroad as well, and they said they don't know how to react to this, because the QE of this size has happened for the first time. The tapering also is happening in a similar manner. So the reactions, the forecasts really are not so forthcoming.
Well, what we have seen is that there was a kind of a bubble situation in the global market because of the easy money coming from the US, and that's what has rallied a lot of emerging market. India had the least benefit of this rally though, but we have seen the other markets like the Brazil and the Southeast market has rallied a lot due to the money coming from the US. Now we have to see that when the money is pulling out by US, which are the market going to be affected the most, and we will see that the market where the bubbles are created the most will the most affected markets. And also we have to see that how faster the tapering is going to happen, because the $10 billion is not the benchmark. If the economic data are better in the coming months, we can see on the higher amount of tapering, maybe a 15 billion at a time.
Pramit, looking at the Indian domestic fundamentals, then we are looking at high inflation even now. We are still looking at that election build-up that will happen in April, May. So this quarter, next quarter, what's your sense on the Indian rupee then?
I think we will see the rupee is going to depreciate from this level as well. The election effect is still not coming in, as well as the tapering effect we have not seen yet, because if you look at the yesterday's close and today's market, the tapering effect actually has not come to Indian market that much. So we will see the tapering effect will come, as well as the election effect. So I think we're going to have two side effects coming, one on the election, the domestic condition, and another from the global markets. The election effect, I think, more or less will come at the end of the Feb, where the government will or the election commission will announce the election dates, and according to that the effect will come. But I think right now we'll see the more of a global effect in next 3 to 4 weeks, and the Feb onwards we'll see the domestic market effects coming in.
Pramit, as we talk about the tapering, because that really has been the big subject in last 1 week and more, would you say that all this stimulus that was in the markets only provided liquidity to equity markets, or markets rather than the economy, and going out of it shouldn't really impact much more than the equities again?
I would say equity is not the only place in the global markets. If we don't look at India but other markets, it has also entered into the infrastructure projects in a lot of emerging countries. So like you were just talking about Thailand, there is a lot of hot money has flown into Thailand from the US and the other places. So the pulling out of this money is not going to only affect the equity market, it can affect the infrastructure and the realty projects as well.
So final question from it, going forward, how are you looking at the rupee performing vis-a-vis US dollar, and what's your sense on the dollar index as well?
The Indian rupee is expected, as I said, that I think the 62 level is making a lot of ground at this level, and going ahead we can see the rupee go into a mid 63 range or higher 63, and then onwards we have to see how it's going to affect move ahead with the effect of global effect as well as the Indian elections coming up. Dollar index, I think overall dollar index is going to get stronger looking at the global scenario, because the major currencies are not doing well against dollar, apart from the where US dollar has weakened against Japanese yen in the recent week, but that is, I think, a short-term effect.
Okay, uncertainty is still galore, and you could look at some more appreciation, or rather range-bound trend coming in for the currency going forward. With that, Pramit, we'll let you go. Thank you so much for joining us.